Hello and welcome to Group 2 Inc., G24. We have been procured by Atlantic Corporation to provide consultation on the proposed acquisition of Royal Mill Paper and Box line of assets. Um, to be honest, this proposal is going to consolidate, some information on the proposed acquisition of uh, paper, Royal Paper Mill and Box line of assets. So, an overview of the industry is, we need to figure out whether this is a good uh, industry and competitive purpose to buy the liner board and the corrugated paper. So, to best summarize that, um, the top five producers in the industry uh, account for approximately 35 to 40% of the entire linerboard market. These are your major corporations like Smurfit Stone Containers, Weyerhaeusen, International Paper, Georgia Pacific, and Inland Paper. Those are the top five. Um, Obviously, this expands across the entire globe and not just the United States, but we're basing this on the United States because that's um, where the bulk majority of the Royal Mill Paper Company's assets would perform. So demand for the linerboard and boxes has increased due to the continuous need of linerboard products. The biggest purpose is these are used to ship goods throughout the world. So they're the boxes that most of our stuff comes in. So based on the inelastic demand, linerboard and box sales are predicted to increase about 7% each and every year. And this is due to the capital intense nature of establishing new linerboard manufacturing industries. Uh, so there's lowering capacity and increasing demand. So, which is, that's a great thing for industry. Um, they have projections by 1985 that the entire industry is going to be operating at 100% capacity, which is just incredible. So this is a great, so far a great opportunity to jump into. Uh, so, um, you know, Although the demand and supply increased during this period, prices have not adjusted downwards. So that's another great point there. So the competitive analysis of the linerboard industry is we've observed several competing companies. We found the industry to be very fragmented and in a competitive market. Um, this is kind of due to large and medium-sized companies in the industry. There's not very many economies of scale in the linerboard products. It's generally regionalized, and it tends to be a greater range of products or customers that provide economies of scale. So this is something that small companies can actually successfully compete in the market and go for smaller retailers. Um, so it's a wonderful thing. Um, the true rivalry is manufacturing capacity, and so that's a big assessment on whether or not Atlantic Corporation should purchase the line of paper mills there. So uh, the industry has a very high threat of new entrants. Because substitution is pretty easy and bargaining powers is definitely on the sides of the buyers. So there are, uh, it can definitely help. So we can certainly see an upside in expanding Atlantic Corporation's position in the linerboard industry. Uh, so in exploring the strengths and weaknesses of the corrugated box and linerboard industry, uh, we found that there are a number of strengths, and one of those is the abundant supply of raw materials to make the products. Um, Only three raw materials are required: paper, adhesive, and stitched wire. These materials are easily obtainable and it does not matter on your location. So the another thing is customers have the ability to customize and print anything, so that's a great strength for the industry. The next big strength is that there's low turnaround times for investment periods. So these areas can really provide bang for your buck initially. So the weaknesses that we can see here are the corrugated materials don't really have a great shelf life versus plastic boxes. So plastic obviously is more sturdy and stable than a cardboard box. It lasts longer. So a big concern would be moisture that can really truly destroy these boxes here. So which is a big thing. There's a great opportunity to counteract this through recycling and green initiatives. So the external opportunities and threats. The external opportunities for investment project is that the linerboard and corrugated boxes has increased the electronic retail sector. So companies like Amazon, Flipkart, and Jabong, as you see in the television ads. So because consumers' lifestyles are becoming more online, there is a bigger habit for this industry to grow. Another opportunity for these products, they don't have to be standardized, so they can really be engineered and conform to, customized to the consumer. So, the threats is, like we said, it's a marketplace where anyone can get into. It's hard to differentiate between the producers, which causes great competition among there and increases the buyer's ability to negotiate with the sellers. So the overall strategy would be to acquire a number of mills and plants from Royal Paper in an attempt to increase the Atlantic Corporation's position in the linerboard and corrugated boxes industry. Obviously, right now that's something that we're discussing here, and currently an acquisition of the approximate value of $300 million, which has been what was kind of proposed by Royal Paper. It would definitely improve Atlantic Corporation, and currently 1.5% of Atlantic Corporation's profit margin or revenue comes from the linerboard and corrugated industry. Obviously, this purchase would drastically change that. So it's something to note that Atlantic Corporation, we must expeditiously execute their plan to convert the Royal Mill Paper facilities to linerboard capabilities. So this will enable Atlantic Corporation to additional capacity. So in the sensitivity analysis, we determine the net present value. And so in order to do that, we found that the project acquisition cost of $319 million with a discount rate of 19.98%. Net present value of the project resulted in a positive $106 million. So that is a good sign here. And the internal rate of return was 24.33, with the higher return than the 19.98 required rate of return. So obviously that is a good idea. So in addition to that, we adjusted the mills down by 10% sales and up by 10% in order to figure out the net present value and the internal rate of return. And so with the downwards numbers, the net present value remained positive. The internal rate of return remained higher than the required rate of return there. In estimating Atlantic Corporation's cost of capital, we use the weighted average cost of capital method, since the project will be funded by both equity and debt, as mentioned towards the cost and capital of 19.98. So we computed a 6.63% risk-free rate of return and an expected market rate of return of 16%, a debt capital structure weight of 1.97, a beta of 1.395. You can see that in our exhibits there. So what we recommend is a 70% equity and 30% debt structure. This 30% would issue 1.9 million shares of common stock to make that 70% up, and the remaining dividends from bonds would be over a 10-year period. So the Fritco analysis, we found that there's a couple key points. There is a potential to use the $200 million line of credit, but the credit line is flexible. It is not a good term option for long-term capital. The risk factor is high, and the ability to grow is reduced by taking that, borrowing that debt. So we found that it was much more risky than issuing those preferred stocks and bonds there. So therefore, we decided it offered more value to the owners of the common stocks and bonds to shy away from that. The timing factors, Atlantic Corporation issuing it at $2 below par value or face value, allows the investors to pay in and immediately have an increase in their investment. The timing is great for Atlantic to issue stock. So, and those were the two big factors in Fritco. So nothing else was needed to be considered at that point. So what should the financial plan consist of? Now we have the decision to purchase this portion of Royal Papers, the mills, and liner box. We need to figure out what exactly we have to go over. So issuing the 70% shares of 7.9 million would make sense to issue about $95 million in bonds, and stocks would gather approximately $223 million on an asking price of $300 million. Obviously, we're going up from that, so those numbers will change slightly, but those are the general numbers there. So it would need to be a quick purchase, so we would need to issue the stocks and bonds very, very quickly so we could get the return on value to our investors. Going forward, even with a reduced rate of 10% sales, we see a strong financial acquisition. In the worst case scenario of 10% less sales, the original projection, internal rate of return greater than 23%, and the weighted average cost of capital is 19.98. So this can gain immediate equity. So determining the price at this point, we have determined initial cash bid offer of $319 million. No line of credit is needed there. Based on the Fritco analysis, the financial investigations, we have decided that, in conclusion, we would like Atlantic Corporation, and we strongly recommend they purchase the line of mills for $319 million. We can show solid returns on equity. We can show the numbers to prove that in not the best situations, the 10% reduced sales, it would be a strong move and a great way to enter into the linerboard and corrugated paper segments, much larger than so.